day's break, that's exactly what you want to see. All green on the screen. And fortunately, we've not been prey to any bad news. I think lack of news in this kind of a market environment, Nikunj, is turning out to be good news.
1 day break, I think a 2 day, 3 day break for you, no?
For me, it wasn't a break as you saw. I was at work, but yeah, anyway.
No, Aisha, you got to ask yourself a simple question. Where problem kahan hai? The problem is in the world, which is what's happening to the US financial sector, what is happening to European banks. But despite what is happening to global financial sector, global markets are up and running. Nasdaq has recouped whatever it has lost. Most of the developed market equity benchmarks are stable. So while the Indian underperformance, I think, is evident and it is quite stark, one is getting a lot of support from the fact that globally what appeared like a repeat of 2008, which everybody thought that we are in for a messy global financial meltdown kind of a scenario, that concern clearly has evaporated. So as you walk into trade this morning, global cues are stable. Foreign institutional investors have stopped selling. The compulsive pressure of what we saw in the month of March in terms of year-end adjustment, F&O expiry, that is behind us. So I would say that after 4 months of a straight line decline, it is time now to play for a tactical bounce. I will not be surprised that April perhaps could be a good month, and it could be a month where the bulls are actually rewarded.
In fact, even for US equity markets, we're actually bad, or rather above, in fact, not just back the pre-banking crisis with SVB. If you just were to look at the headline indexes, be it the Nasdaq or the Dow and the S&P, the US weekly jobless claims, they've risen by about 7,000 of a count. The dollar index has fallen about 0.5%, and gold and crude both have seen an uptick of about 1%. So that's really what's transpired when we were on a day's break. Talk about our markets and commodities for that matter. Commodities are the ones which are actually seeing a bit of a spiral up. So across the board, be it WTI oil, which has jumped up about 2%, Brent, which is up 1.25%, natural gas, gold, silver, copper, they've all seen an uptick. In fact, even agri-commodities are the ones which are on a bit of a spiral up. And talking about our markets, it seems like it's going to be a positive start, and we're back at that higher end of the trading range, around that 17,200 level.
You got to be more bullish than bearish for the month of April. That's how I look at the setup. You had 4 months of straight line fall. The fall was largely because of global factors. Those global factors are getting addressed, they're getting arrested. That's one. Second, for institutional investors, month to date, they've turned net buyers. So the liquidity problem, which was sucking out momentum from the market, that also seems to be getting addressed. Third, you are in for an earnings season where this time around expectations are very diluted. There is a crack in the commodity complex, especially the crude complex, and that is something which will only factor in more margin expansion for commodity consumers. So I would say that for the month of April, looking at the positioning, looking at the market setup, global cues, market expectations, and the F&O activity, I will not be surprised that April could be a good month. Good does not mean that it's going to be a 5-6% uptick. Good means that the trend of decline hopefully should get arrested in the month of April. And the technical range, like Aisha also said, that we're the upper end of the range. Not really the upper end of the range, but the lower end of the range has been beautifully defended in this global meltdown.
Well, today we also closed the financial year. How quickly the financial year at least has closed. And I mean, sadly, we have been one of the worst performing index in the fourth quarter, in the last 3 months, that is. And we're likely to close negative for a fourth consecutive month as well. The FII-DII trend, that continues to abate us, so FIIs continue to sell India. And even if you were to look at the performance in FY23, for instance, the Nasdaq lost about 15.5%, the Dow has been down about 5%, and both the S&P as well as the Nifty have managed to lose about 10%. I don't know if that makes a stronger case for a better rebound, because the world markets have recovered, we're clearly lagging behind.
So Aisha, let's look at that FY23 market performance. Yes, we've fallen less than what global markets are, but it's no longer that stark as what it, let's say, looked in the month of Jan. In the month of Jan, Indian markets had not fallen at all and global markets had cracked in 2022. So now that connection between S&P and there you go, Asha. See, S&P 500 in last 1 year is down 10%, Nifty is down 10%, and Dow in fact is down 5%. So all I'm trying to say here is that the outperformance what Indian markets registered in FY22, now if you expand the last 3 months of timeline, add another quarter in it, that outperformance I think is getting completely diluted. That is something which I think is worth mentioning again and again, that A, price-wise correction, B, time-wise correction has kicked in. And no wonder from a JP Morgan to a Morgan Stanley this morning, from a BofA ML to Citi, all of them now have come out with a brave foot forward, which was not there at the beginning of the year, that it's time now to buy India. Now it's judgment call whether you buy a 5% decline, you buy a 10% decline, or you start buying now. But it's time not to sell. This is not the time when you want to go short. This is a time whether you want to start accumulating depending on your comfort in terms of a price point. But the risk reward ratio, I'm going to stick my neck out in here and say, is in favor of going long.
Okay. And of course, next week is going to be another crucial one. You've got the RBI policy, Nikunj. Q4 banking updates will start coming in. Brokerage reports on IT will start trickling in ahead of the earnings season. And of course, the March auto sales numbers as well.
Lots of holidays next week.
Okay, losing track of that.
Good Friday, there's a holiday on Tuesday, I think. So it's one of those, April, you get this 1 week in April where you have two holidays, one patch. So likely that's a patch next week. But yeah, as we, that next week, it's going to be full till back to news. Credit policy, auto numbers may not be that crucial, but ID numbers in a sense really would be crucial, considering that all we are getting from the IT sector is bad news after bad news. Campus hiring is slowing down. Bonuses are getting reconsidered. The layoff word again is back. The sugar rush is over. And forget, moonlighting. Right now, the whole concept of moonlighting, which everybody was troubled about last year, is now just behind us. So next week, in a sense, would be starting next week, we move into the news phase of the market. The month of March was all about technical and what was all about global cues. But next week, I guess the local cues, in a sense, will overarch the local news flow, in a sense, will overarch the global news flow.
Yeah, absolutely.